There's a new app that will give you personalized whiskey recommendations. Santa, I know what I want for Christmas. Investor Beat starts now. Thanks for watching. I'm Chris Hill, joined in studio by Charly Travers. A lot going on this week with CEOs. We had General Motors naming Mary Barra, longtime employee, as the new CEO. Lululemon Athletica getting a new CEO with a whole bunch of challenges there. It got me thinking about this transition. As we talked about before, this is tough for businesses to pull off. Even when a company needs a new CEO, it's tough to pull off well. How does it affect your thinking as an investor when a company that you own or you're looking at suddenly has a new CEO? Does it make you nervous? Does it make you excited?
I have to take that on a case-by-case basis, Chris. I think evaluating a company's executives and their corporate culture is one of the hardest things to do as an investor, especially if you have an outsider coming in to take the CEO position. They may look like great on paper, may have a great track record at other companies, but it's hard sometimes to know if they're just in the right place at the right time or if they're actually awesome. So I usually say you have to give a company a new executive a couple quarters to see how they're doing in their new role. It's a lot easier when the company's doing well and they're coming into a good situation versus a turnaround.
I was going to say, if you're the CEO, what are you looking for? What's the ideal situation? Because on the one hand, you get a company like Costco, Jim Sinegal, great longtime CEO, Craig Jelinek, who's been with the company a long time. He becomes CEO. He's got big shoes to fill. But to your point, it's a company that's operating really, really well. On the other hand, we had, well, JCPenney for one, Yahoo for another. Different results there for Ron Johnson and Marissa Mayer, respectively. What's the ideal situation?
I thought the Costco situation where your job is not to break something that's awesome is like the cushy job. But also I think—
maybe not cushy.
Not cushy, but it seems like you're going to sleep a little easier at night than if you're walking into a Yahoo situation where you have to fix the culture and make your employees productive. But if you pull that off, everyone thinks you're amazing, and basically you do whatever you want after that.
All right, let's move on to Amazon. Shares up today on reports, and I should say these are unconfirmed reports. Amazon isn't saying anything, but reports that they are working on a packaged goods business known as Amazon Pantry. It's going to allow them to ideally better compete with bricks and mortar retailers. If you are Costco, if you're Walmart with Sam's Club, and you're watching this story unfold, how nervous are you?
I think this is almost a certainty that they're going to do this. You can already buy grocery items through Amazon. I get dog food and cat food, for example, through Amazon Prime. They've also launched Amazon Fresh in some cities on the West Coast. For $2.99 a year, you can get same-day delivery of groceries. This seems like a logical next step for Amazon, and I think they're going to pull it off. The one question would be how much they're going to charge for it. Almost certainly it would not be free shipping to get cans of peaches and peanut butter and the like to your house. But I think they can be successful with this just because they're so convenient. They know so much about what their customers want. If you are Costco and Sam's, you got to be watching this very closely.
Now let's be clear, Amazon Prime is a service. You pay an annual fee and you get all the various things that you get: 2-day free shipping, streaming movies, TV. How tough is it going to be for Amazon to either add prices or increase prices? Because we've seen companies, hello Netflix, a price increase is tough to pull off.
Right.
And so if Amazon is going to come out and say, oh, yes, you're a Prime member, you're already paying us this annual fee, but if you want this other service that will go under the banner of Amazon Prime, we're going to charge you extra.
I think it comes down to the value proposition. There's a huge chasm between $79 a year for regular Amazon Prime and $299 for these Fresh. They might charge you per shipment for something like this. When you've become accustomed for years for free shipping from Amazon to have to pay $5 or $9 to get your package shipped, I don't know, that might be a little psychological hurdle, even though the convenience you can't beat.
I was going to say, if it's $5, if that means I don't have to go to the grocery store on the weekend and spend an hour and a half of my time there, I think that's worth it. As we wrap up this week, look ahead to next week, the last full week before Christmas. Give me something you're watching.
I'm watching Nike's earnings, Chris. This is just one of the best companies in the world. They are definitely the leader in sports shoes and apparel worldwide. They have great pricing power. You can get, say, 5% growth on the top line out of them in the long run with mid-teens earnings growth. Something to look at.
in terms of 2014 sporting events, we have the Winter Olympics, we've got the World Cup in the summer. Are those helpful to Nike? Does it not really matter? I'm just curious if you're a Nike shareholder, if you're even more bullish about 2014 because there are potential tie-ins with major global sporting events.
Oh, I think it's a huge boost for Nike to get their brand out there in that kind of high-profile event. There is a little bit of a drop-off afterwards.
All right, for Charly Travers, I'm Chris Hill. Thanks for watching. We'll see you on Monday.